On today's podcast, I had my friend Big Mike Zlotnik on. He's got over $250 million worth of real estate under management. We talked about what kinds of things he's investing in, what are some good practices for raising capital. We also talked about the art of playing in your own game. You know, a lot of people try to go and be somebody else when that's not necessarily their talent or their market or what they should be doing. So we talked about how to figure out where you should be playing the game and the right type of strategy to be using. On top of that, he talks about his story coming from Russia as a mathematician. I'll give you guys a quick disclaimer. He is a mathematician, so just, make sure you stay through with the podcast because things can get very technical. And, he's got a lot of wisdom and value that he shares throughout. So stay till the end. We talk about different things that we are going to be investing in together and some new ideas for my fund. So without further ado, let's jump into it. Are you looking to grow your real estate investing business? My company, Future Flipper, can help. We've taught hundreds of people all over the country how to flip, wholesale, and buy rental properties. And it doesn't matter where you're at in your investing journey. Whether you're trying to get your first deal or scale your company, Future Flipper can help. We have courses, coaching, and events for all levels of investors. So if you want to take the next step, go to futureflipper.com and book a free consultation to see how we can best help you. Once again, that's futureflipper.com. If you've ever wanted to invest with me on my real estate deals, it's now possible. At Pineda Capital, we're purchasing value-add real estate all across the country. This includes multifamily, commercial, and land development. The best part is, with my network, social media presence, and marketing strategies, we're able to get the very best deals that others don't have access to. You can join in with me on those deals if you're an accredited investor. If you want to learn more, head over to pinedacapital.com to see our current opportunities. Once again, that's pinedacapital.com. Welcome to the Ryan Pineda Show, where our mission is to invest.
I only expect to make money in things that I understand.
Innovate.
It's about believing in the future and thinking that the future will be better than the past.
And inspire. I am much more likely to hit my goal just due to putting it out there.
You now rocking with the best.
What's going on, everybody? Welcome to another episode of the Ryan Pineda Show. Today, I've got one of my fellow members in a mastermind I'm a part of. He is managing $250 million plus worth of real estate assets. He's got multiple funds. This guy is who I look to when I want to learn more about funds and, ways to raise capital. None other than Big Mike Zlotnik. What up?
Hey, Ryan. Thank you very much for having me.
Yeah, dude. So thanks for coming out to Vegas. I know that what brought you out was a poker tournament. It wasn't necessarily me. Yeah.
The truth of the matter, maybe it's poker, maybe it's you.
But but you told me though the poker didn't go too long this time around.
Yeah, these tournaments don't last too long. If you enter it late, you're either double up or you're out.
Yeah, he said his flight got delayed earlier, and by the time he got in, the big blind was already so high that he pretty much had to go all in, and you were out within a couple of hands.
Yeah, 3 hands, you're done.
It's not good. But anyways, at least you're here today, and we can talk funds and multifamily investing and land and all these crazy things you're doing with all the capital you raised. But before we do that, dude, why don't you give the listeners a little bit about who you are, where you came from?
Thank you. So I come from Russia with love, as a matter of speaking. I grew up in the former Soviet Union. Actually, it was called Soviet Union then. Left in 1989 as a political refugee from the communist empire. Came to the States. I'm a U.S. citizen and a U.S. patriot. I've lived in the state of New York pretty much since 1989. I live in New York City. My lovely wife. 4 monkeys and a cat. It's 4 kids and a real cat.
There you go.
That's home, Brooklyn, New York.
How old are the kids?
21, 16, 12, all girls, and a boy is King David, 9.
Oh, so you finally got one at the end.
Yeah.
Nice, dude. I love it. So why New York, man? What brought you out there?
It's family. We kind of settled in upstate New York. And my mother and sister still live in Rochester, and I just live in New York City. And I don't know what to tell you, but we live in a very close extended family, and that's why New York. There's no other reason. I'd probably be somewhere else.
Yeah. we have a lot of guests on the show. Most of them are West Coast or maybe like Central and Texas and stuff like that. And, we'll get East Coast people from time to time, maybe like the South or Southeast, but I don't think we've really had too many Northeast people, man. It seems like I know there's a lot of real estate happening in New York. It's huge. But for whatever reason, I think they're like doing such crazier things than like the rest of America is maybe like used to.
It's different.
Yeah.
It's very different. New York City experience obviously is a big city experience. I love investing in New York in sort of a few kind of sort of sub areas. One is distressed debt, which is something interesting and different. But New York has sort of priced properties, and we have an interesting project coming up in Manhattan. But in general, I live in New York, but invest quite a bit outside of New York. So the fact that I'm in New York doesn't mean I invest in New York. Just a disclaimer.
Right. I gotcha. So how did you even get into this investing game? You came over here in 1989. That was actually when I was born. Um, so how'd you jump into the game?
Sure. So I graduated college with a degree in mathematics and computer science, spent time in technology industry, loved it, and I was burned out after almost 15-year career. But I started investing in real estate in New York, buying sort of apartments. This is New York and city. You start with your primary residence always, and then once you cover that, you start looking for investment property. And most of us invest in your home, right?
Right.
You want to brick and mortar, touch the wall and feel good about that. But I started being a part-time passive investor, accumulated a portfolio of apartments, and then in '89, I was, as I said, burnout in technology. Nothing wrong with technology world; it's a lot of fun, and kind of discovered what it means to be a full-time real estate investor and a fund manager in 2009, and never looked back. It's kind of both my genius zone. It's a journey. It's fun, and it's kind of what I love to do.
So you went full time in 2009. I mean, this is right after the crash. Like, what was that like?
Well, the city of New York didn't really see that kind of a big crash, but I did enter essentially at a great time. So I didn't see full life cycle. There was no crash for me per se. New York has done fairly well, and then we went full speed ahead after 2009. So I'll waive the disclaimer that I never lived through a massive crash and a recovery, but we've been on that ride up from 2009 until now, and we've done extremely well.
Right. Yeah, it's crazy, man, because I got licensed in 2010. So, I've seen it ride up extremely, the same way too. And I have not lived through a crash myself, having invested in it by any means. And, I lean on mentors and other people who have to kind of like keep me in check, because it's hard to not think, oh, it just always goes up. And what do you think is going to continue to happen as far as the market goes?
Sure. So it's a great question. I used to have a wonderful crystal ball, and it broke, and I'm looking for another one for sale. Unfortunately, you can't predict exactly the market cycles, but you can prepare. So as a fund manager, I can tell you that the best way to manage these uncertainties and risks is through diversification. Not a perfect world. Diversification is not for everyone, but you don't know. And you being a baseball player, you could put in your best effort, but you don't know which strike is going to be a home run and which one is going to be a strikeout.
Right.
So you just have to have enough of these strikes and of these
At bats. Yeah.
and then you spread the risk, and you will see home runs. You'll see enough of them. If on average you do well, it's all about the inputs. As long as you make the right investments and the right effort and the right projects, you'll hit enough home runs that'll compensate for the strikeouts.
Yeah. Yeah. It's funny because we look at this with house flipping and stuff, and it's like, man, okay, when you flip a house, you better be near 100%, because, if you're 50-50 on making money or not making money on flipping houses, you ain't going to be in business, right? But in baseball, right, you can be way less than that. If you're 30%, you're an all-star. You're the best of the best. And when I look at other things in life, as it relates to real estate, we talk about making offers. And it's like 99.9% of the offers we make don't get accepted if you're doing it right. If you're making a ton of offers every day, most of them should get rejected. And you only need that 1% to like be ultra successful. And so it just goes back to the principle of taking at bats. But as I've studied more and more in business and in life, I've seen it play out even further in venture capital. These guys invest in all these startup companies, and they know that, once again, 99% will fail, but 1% will just give them such an enormous return that it does not matter. It's crazy.
Yeah, and again, having spent years in technology world, I've seen that where you look for that one investment that's going to be your next Amazon.
Right.
Very different in real estate. I'll beg to differ than in real estate. As much as you are trying to make a home run here and there, what's really important, you really focus on singles.
Yeah.
So in real estate, there's no rule of thumb, don't lose money, but there is a rule of thumb, don't lose money. From the point of view that if you do deals that are conservatively underwritten, then you prepare for the good, the bad, and the ugly scenarios. In general, you don't have as many downsides. And when the upsides hit, the home runs, on average, you can actually make very strong risk-adjusted returns. And the key words are risk-adjusted returns. Most people don't think about it. They think about bright and shiny objects. Hey, this is a deal with 25% return. That's wonderful, but what is the risk? If you're taking a lot of risk, you may be not preparing for the losses. And
Right.
So that's the point in real estate. Be prepared for a few losses, but in general, invest conservatively.
Well, it's interesting because, to me, real estate should always be underwritten conservatively, right? Especially these big deals. But I tell my students that all the time with house flipping. I'm like, guys, yeah, I know the market's hot. I know that there's a good chance prices do go up by the time you flip it. We're seeing the same thing right now. But you need to conservatively underwrite it based on what the value is today. Don't get aggressive with your rehab budgets and say, oh, I could get it done for, 30 grand when it's going to be 40 grand. Like, dude, if the deal doesn't work, then don't do it. Don't try to push the envelope. And as long as you can do that, you're going to win a lot. Now, as your company grows and other things, I've become more risky over time. I'll take on thinner deals that, maybe I feel like, yeah, I probably wouldn't do this if, this was all I had and this was the only deal I was doing. But, even if it doesn't work out, it's not a big deal. I've got other things going on. I've got other streams of income. I can absorb a loss. So I think everyone's risk changes over time as they, accumulate more wealth or as they've got more stuff going on. For you, how have you seen your risk adjusted as you've gotten older?
Sure, it's exactly. You got the wisdom capture, right? As you get older, you take on less risk. You learn when you're young and aggressive, a little bit opportunistic, and optimistic too.
Yeah.
And I'm not trying to say I'm an old cat. I'm turning 50, but I've gotten a little bit more conservative in general when investing. And it's just a philosophy. It doesn't mean we won't do deals with a high degree of risk if we have appropriate high degree of an upside. I'll give you some examples so you don't think I am, pardon me, that old cat that just sits there and invests in these low risk deals.
Right.
So we've picked up on a great opportunity in the post-COVID world. We started investing in the hotel conversions to multifamily, especially affordable workforce housing. And that whole sector kind of has exploded. So we've gotten deals with where we more than double the money in less than a year and a half, getting strong returns. But we're taking risk. These projects, development, redevelopment, have a lot of risk at the same time. The upside is big enough to justify the risk.
Right. So tell me, how does a hotel conversion work? This hotel, was it functioning as a hotel and you just were like, hey, we're laying off all the staff and, we're just making this thing an apartment? Or was it, hey, we're going to turn this into an Airbnb? Or is it, hey, you guys are now doing something different? How do you even go about it?
Pardon me. Well, the thesis is pretty much during COVID, a lot of hotels were dysfunctional. So if you pick these projects up in the middle of COVID, you probably pick them up at a pretty good price. But in general, there are hotels that naturally fit to be considered as multifamily, like extended stay hotels. You've seen them, some
Right.
residence in hotels. So the play is basically take the extended stay hotel, do light lifting because they have kitchenettes, they look like mini apartments,
Yep.
and convert them into multifamily at a fairly reasonable cost. So why does the play work? For a couple of reasons. One is the cap rate. Again, commercial underwriting. Cap rate on multifamily is substantially lower than
A hotel.
hotel. Exactly. And even if you get same level of income but lower cap rate, that math alone already takes care of the business.
Right.
So projects like this make total sense. There are a few types of hotels. There are extended stay, and then there are ones that look like Ramada Inn kind of studios.
Mm-hmm.
Depending on the neighborhood, depending on what is needed in a given area, that conversion path may be a little different. But in general, it's all in the execution. If you can execute the conversion within typically 12 months, sometimes 18 months, you can lease it up. It's a fairly easy play. And most cities and towns are short on affordable housing. That is the key. You're creating a product well below reconstruction cost.
Right.
So just all that math combined together creates a very, very strong risk-adjusted return opportunity. The value creation is so substantial that even if prices compressed and there were, recession or something else, you could still make money on a project like that.
Right. So when you say extended stay, you're talking about literally buying the extended stay.
Yes, garden-style hotels, not New York City.
Yeah. I've stayed at plenty of extended stays, so I'm very familiar. I just was like, okay, I don't even know how extended stay works. Like, do they own the buildings? Are they just, the buildings licensing the extended stay name?
Well, in general, you have a flag, right? In the hotel industry, you have a flag like Marriott flag or Hilton flag.
And they just license their name and manage like for the owners of the real estate, right?
That's right. It's like a franchise in the manner of speaking. So
Right.
you have a flag, the reservation system to fill the rooms, but in general, you as the operator own your own real estate,
Right.
and you have kind of real estate, a property plus an operating company on top of that. So all the hotels is a mix of two businesses. It's real estate plus the operational business, while multifamily is purely passive. That's another beauty that the multifamily is more desired because it doesn't have that operating component.
There's no true business to it.
Correct.
Right. So, okay, you see this extended stay, they're listed for sale, and they're like, okay, this just isn't worth it anymore. You underwrite it, you start looking at the deal, and you say, okay, the cap rate is much lower on this. They've got good population, you like migration trends or whatever it is you're looking at, and you're saying, okay, I'm pretty confident that as long as we just slap a new name on this as Big Mike's apartment complex, we should be good because most of those are in great shape already. I mean, they're renting them as hotels. Like, how much rehab is really needed?
Relatively small. That's the beauty about
Yeah.
extended stays. So you have to run the math. As crazy as it sounds, the quality of the deal is only underwriting. As long as you can see the end product, not terribly exciting.
There's no huge before and after. It's just getting the zoning changed.
At times, they already zone. That's one of the key requirements. One of the key considerations during the due diligence is to make sure the zoning, sometimes naturally, they're zoned for multifamily.
Oh.
So the lifts themselves doesn't even require rezoning.
So you buy it. It's already zoned multifamily. You just say, no more extended stay, Big Mike's apartments. Boom. Let's get some like long-term tenants.
It can be as easy as that, and some of them might require some city approvals.
Right.
Most cities and towns welcome this because it is
There's no housing. Like, people need it.
bingo,
They'd rather have housing than a hotel.
bingo.
Yeah. No, that makes perfect sense. I think for all you at Pineda Capital, we're going to be looking at some of these, and probably with you. We've been talking about doing a lot of deals together between what you're finding and Pineda Capital coming in and investing in them. So I'm excited. Let's do one of those deals. I think that'd be some great content to I'll be at the extended stay and I'm like, yeah, we're just gonna make this Ryan's Apartments and call it a day.
Let's do that. I absolutely looking forward to doing business with you. It's a great idea. It's what's really interesting is the idea has existed pre-COVID. We had a project, just to give you a little color. We had a project we invested in 2019, pre-COVID. And it was a conversion, not even an extended stay, but an older, just a boutique hotel in Ogden, Utah, and converted. And in 21 months, essentially, we received 73% IRR in 21 months.
Crazy.
Yeah, numbers are just staggering.
Yeah.
So it's not, let me just make this disclaimer. As wonderful as you said that it's so easy, there's work.
Yeah.
The development or development, it has to be sharp execution. But the key point here, and we were chatting pre this call about ground up development, and you're developing really, really cool office. All that is wonderful. My 2 cents comment, it is easier to redevelop. If you have an existing property, it's a whole lot more cost efficient.
Yeah, for sure. Yeah.
So that's the idea. Versus new construction, multifamily. Sure, you could build a brand new complex, but the problem is your cost per door is substantially higher.
Yeah. No, 100%. So with that being said, there's so many opportunities out in the world right now. And, you're talking about making a hotel to multifamily, but I have seen the opposite of what people want to do. I've seen people say, hey, we've got this multifamily. We want to convert it to condos. We want to sell the condos all separate. I've seen people say, yeah, there's these like little hotels that aren't performing or even multifamily. And we want to go convert them to boutique hotels, like these cool hipster kind of places that people want to go. Have you seen that happening?
Yeah, I've seen it happening. I'm actually working on one project in the South Beach, Miami, potential conversion. Yes, you could take a sort of a boutique hotel and make it into Airbnb. It was one example. It is basically it's a precision execution. You need to be very careful. You need to have high confidence in ability to convert and execute, and you can make it work. It's a niche. There's an expression, there are riches in niches. Mm-hmm. So if you can execute on a great niche, you can make a ton of money. And I'm going to switch the subject. We actually have some of the these riches and niches concepts. I actually ran a podcast a little while ago and called it literally riches and niches, the riches and niches.
Yeah.
And you could generate some great returns and find some great deals in these one-off, very specialty type of conversions or other ideas.
Right. And that's what blows my mind about commercial is that we could all be looking at the same thing, and there's like 10 different exit strategies that are going to drastically impact its value. And, when I look at a house flip, I'm like, okay, we're doing this. And yeah, there's some customization and things that can tweak profit. But at the end of the day, that house is still only going to be worth what the appraisal says it's worth, based on the comps around it. But in commercial, like you just mentioned, okay, we're going to totally change this from a hotel to an apartment. This is worth significantly different. You value it way differently, cap rate wise. And, or, hey, we're going to go turn this boutique hotel into Airbnbs, and now we can go rent each room for way more. It's still kind of the similar concept of, it's furnished, you've got cleaners and everything else. It's already set up to be an Airbnb essentially, but now you just change it around a little bit, and now you're bringing in more income.
Yeah, just a quick comment. You're going to laugh at this, but I had a call from another brother from the CG Mastermind. I'm going to keep the name private. He called me, says he's trying to acquire a property that's an apartment complex. He wants to convert it into essentially Airbnb.
Right.
And I said, it's an awesome idea. Let's talk about the math. Can you get the rental income enough up to the point where the numbers speak for themselves? So it's all about the numbers.
Right.
You could, you're not turning, you're not making a stew out of thin air.
Right.
You're making something out of something else, as long as that transition path is executable at a reasonable cost, and your end product economically works better than the previous, and it's the highest and best use, and you could make good money and make a big difference in the world.
Right. So I love that. And there's a bunch of other creative ways that you can get into, multifamily and other things. And I want to talk about land, because you're doing some interesting things with land. And I personally am looking at a lot of development, like you mentioned, with, our office space. And, I'm building my dream home right now. And I've been looking at doing some spec builds in the luxury segment. So I want to get your thoughts on land and development. But before we do that, let's hear a quick word from our sponsor. Have you ever wanted to invest in real estate, but you didn't have the time to find deals yourself? That's where Fundrise comes in. Fundrise is a crowdfunding platform that has transacted over $5 billion in real estate and has over 150,000 active investors. While many funds, like my own, require accredited investors, Fundrise allows anyone to invest with as little as $500. If you'd like to learn more, check out fundrise.com. Once again, that's fundrise.com. Are you looking to find off-market real estate deals? One of the best tools my team uses is Batch Leads. With Batch Leads, you're able to pull data, manage lists, and send text messages. On top of that, you can get nationwide access to the MLS to get pictures and comps. My team has used Batch Leads to get some of our best deals, so I know it works. If you want to start today, you can get half off your first month by going to batchleads.io and using the promo code Ryan. Once again, that's batchleads.io, promo code Ryan for half off your first month. Now, back to the show. So what are some things you're doing with land?
Sure. So land, something really interesting. We're doing a couple of things with land, and really back to the riches and niches. The opportunities to make great investments in this sort of a low-yield world. How do you find income? So we're doing two things with land. One, we have investments with a good friend of mine, and really this is not an investing strategy in general. This is an investment strategy with a specific individual and their experience and track record. So we have a gentleman who is in Lake County, California. He's been buying land and getting it permitted for cultivation of the good old cannabis. And it's a pretty good play. You could pick up land. The project that he did, he picked up 300 acres for like $1.5 million, some ridiculous low price.
Right.
Got it permitted, maybe all in $2.5-3 million bucks, and it's $9 million exit.
He didn't have to build; he just re-permitted it.
Yeah, it's getting it permitted
Right.
for cultivation. It didn't have a permit. Now there's expenses. You have to put a well. There's a few things you have to do to get something permitted. But he's not even growing anything there. He's just getting the land permitted.
You're gonna sell it to a grow.
Bingo. Yeah. So that's one play. And what we've done, kind of being a conservative investor, we've given him loans, typically first lien loan on a kind of like a hard money loan on a property.
Yeah.
We ask for an equity kicker. An equity kicker often is worth a whole lot more than all the interest we collect on the loan. That's one example. The other example that we both have mutual friends. These are guys in the CG Mastermind, Will and Paul. They're discount lots guys, and we've built a relationship with them where we gave them a line of credit. We lend them money on land acquisitions. What the hell do they do with land? Well, they buy land for cash. Typically, great marketers like you, brilliant marketing, technology, acquiring these lands at phenomenal prices. And what they do is they literally sell them on their website 5-6 times the price, but on a payment plan. They create receivables. So they'll buy a lot for $5,000 in the middle of boonies, and they'll sell it to somebody for 25-30 grand on a payment plan, $500 a month. Brilliant idea. And it's very similar, think about this, to a used car business. When people go to a lot, the dealer buys it at an auction, sells it at a massive markup, and then they give you a payment plan. And people do that. The big difference between land and used cars is that used cars depreciate, and you got to track them. With land, you don't need to track, and it doesn't depreciate. In fact, it appreciates in this market.
Right.
So that's kind of what we've been doing, and it's a very cool thing. And a lot of people want to buy the land, and you can ask them, what are you going to do with a lot in the middle of nowhere?
Right.
You can erect a shed. Some people like to shoot their guns. Some people just want to have their own piece of
They say they own
America.
real estate, man. You know, it's just there's a lot of pride in being a real estate investor. Like, you know, yeah, I got this piece of land. I don't know what I'm gonna do with it, but land, like you said, does go up, and you know, I would believe that land is going up everywhere, just with the way that we're printing money and just how real estate is.
It's exactly the case. It's been amazing appreciation over the last however many months, and it seems to continue. And the land strategy in general, you have to worry about recession. During recession, the land, empty land, is a risk because you got to pay taxes. You got to pay at least keep it afloat. With receivables, people pay you. And what's really interesting, what these guys do, they don't transfer the title. They sell it on a land contract. In other words, if you pay, you own it. The moment you miss
pay
your
it
first
off.
payment,
Right.
you have to pay off the whole thing before you get the title
Title.
to the property.
Yeah, you don't have to foreclose on them or nothing.
Brilliant
Yeah.
idea.
No, they're super smart guys. I've had the pleasure of talking with them, and they're killing it. So, what else? I mean, like they're flipping land and they're selling it basically on owner financing. What I know you kind of discouraged me from trying to develop because costs are so high, and it's easier to just go find buildings that already exist. But what are you seeing on development? Have you thought about doing spec builds or ground up apartments or anything like that?
Sure. So let me just finish up with Land Guy. So we are not the owners. I try to get piece of the equity, they won't give me, but they pay us high interest rate.
Right.
So our Tempo Income Fund extended them a large line of credit for $25 million, and then effectively we're lending them at 18%, and we are passing through a lot of that yield to our investors. We're paying investors 12 to 15,
Yeah.
charging them 18. It's a little arbitrage, but it's a great setup for everyone.
Yeah.
So now let's switch to the development or development. People obviously build ground up, but being in New York, you can go build a wonderful condo tower. It's a lot of expense, a lot of risk, and you don't know what's going to happen. Could get overly supplied. So you could do it. You could do it here and in Vegas, right? If you find the right project, you could build. And I have nothing against building ground up. You could do phenomenally there. But on the redevelopment side, you can also find opportunity. We're working on a project on East 77th Street in Manhattan. It's about a block and a half away from Central Park. As prime real estate as it gets. And there's a multifamily property that we're essentially acquiring through foreclosure from a very wealthy family that's mismanaged the asset. And we're going to redevelop it into a single family residential townhouse, 16,000 square feet in Manhattan. And all in costs, 40 million, would likely exit between 65 to 70. Imagine single family, 16,000 square feet price property. It's got to be done by the right architect, by the right developer. It's how should I put it? It's really a unique project.
Right.
It's something that you can be proud of. It's something that you can put on your resume for many years. I did this, and this is now a piece of New York history.
Right.
That's kind of what we're looking at. But hey, the plenty of great projects. There's no right or wrong. It's kind of each one is a precision, unique sort of a surgery. It's not you're going to throw stuff on the wall and see what sticks. It's more like you're taking substantial risk with one-off project. You got to have a big upside to make it happen.
Right. Right. Yeah, I think as I've looked at it, I didn't have any interest in new build. And I didn't have any interest in funds either. I mean, I was just a guy who's made money fixing and flipping and wholesaling and, buying my own rentals here and there. And I'm like, this is good. And then, I meet guys like Tim Bratz and, he opens my mind to what a fund can be and, the opportunities with a fund. And, we just closed on that 334 unit building and
Congratulations.
Thank you. And now I'm like, man, the sky's the limit with this stuff, right? Like you can do bigger and better deals. Like it opens you up to all these opportunities across the country, right? Like I wouldn't go flip a house in freaking Georgia, just one house. Like it's not worth my time. But when you do a big deal, it's worth your time. But one thing now that I've been experiencing is development. I didn't consider myself a developer. I'm like just a real estate investor. But now with developing my house, I've realized, man, like there's so much money in development because now the plate is clean. You're looking at this raw piece of land and you have anything you can do with it. This isn't converting an extended stay. This is like literally anything you want to build, you can build. 10,000 square foot house, 5,000 square foot house. You choose what you think is going to be the best play for that land. And I like that. I like the opportunity that if you get a good deal on a piece of land, like just the upside.
Yeah, it is truly America is a land of opportunity. And a lot of people are building ground up multifamily for the reason that there's a shortage, there's a great need. In general, these investments are fairly defensive in nature, but it's in the execution. The risk is in the execution, the success is in the execution. Can you build without major delays, without violations, without problems with construction? And if you can, then you'll create value. So I do like ground ups on multifamily. You could do some price properties, as I mentioned, very high end, as long as you know the market. The big difference, for example, is New York City. Just again, switching for one quick second. The supply of land is very limited.
Right.
So if you're building or redeveloping a townhouse, it's got very limited inventories. Condos, they're building these skyscrapers left and right. If you go to Vegas, here you could build a price property. You could build something you could sell to a celebrity. You could be a celebrity basketball player, celebrity, TV celebrity, personality, and so on. Or you could sell it to a Middle Eastern sheikh.
Yeah.
So it really depends on what kind of the sky's the limit. Whatever you fall in love with and you're good at. So being a developer, it's a great general term. You pick and choose your again specialty. I would say don't be a jack of all trades,
Right.
and be kind of a master of what you're good at.
The
And
riches are in the niches.
it's unfortunate. I wish, and I'll tell you this: being a fund manager and running a diversified portfolio of investments, I wind up owning a lot in a lot of fields, but I don't claim to be super expert in everything. Over time, you gravitate to build more and more expertise in some areas, and then you step away from the few that look good, and then change over time. Just one thought, and you sort of you've evolved and you're evolving in your own kind of career
Right.
to the point where be a capital allocator. In some ways, I really like those terms. As crazy as it sounds, the beauty about capital allocation is you can change with the wind, right? If the wind blows in this direction of hotel to multifamily conversions, you go there. If environment changes and suddenly storage gets nice and hot and phenomenal opportunities, you go there. And if that is not doing well, you go into industrial. So having ability to shift capital, having the discretionary capital and the right to use it gives you a lot of freedom and flexibility to find the best operators, best deals, and then putting them all together into great projects.
Yeah. No, I'm 100% with you. I've said this before on the podcast that, I don't consider myself just a real estate investor or an entrepreneur. Like, I'm just an opportunist. Like you said, I'm going with where the wind and the most momentum are behind me. That's what I'm like. I'm not trying to fight the current. And I just actually read a really good book. Dang, it was so good. I can't remember the title. I'll have to add it back in here. But it was something along the lines of like how to win. And basically, they talked about how, you get to choose where you want to play the game, and you get to choose what your strategy is going to be. And so, for me, it's like, okay, the very first choice you got to make is where do I want to play, right? Just because I've been a fix and flip guy my whole life does not mean I need to be that guy going forward, because that may not be the best opportunity. The best opportunity might be in hotel conversion, like you said. And I've got a situation in front of me where, I've got the resources, the people, and all these things to make that happen. And it's just a better use of my time. From there, once you pick your, where to play, you got to pick, okay, what's the winning strategy going to be? Okay. Are we looking only in this market? Are we looking for extended stays that are already good? They don't need significant rehab. We just got to, easily switch them. And it's just an interesting thing, like you're saying, of, when you're flexible and you have the ability to adapt, you should always, be okay, because you're not just stuck in a dying field.
Yeah, I'll tell you this. So I've evolved over time, and I can tell you that in investing, you have sort of really important questions. What is the risk-adjusted return, right? I mean, I mentioned this, but there's ROI. There's another critical consideration, and it's return on effort or return on time.
Mm-hmm.
And picking and choosing your battles is just as important as picking and choosing battles with a good outcome. So as long as you're thinking that this project moves you towards your goals, long-term goals, and you're getting good return on your effort and time, and getting a great return on your investment, the combination of those things is what drives the decisions, rather than just purely, hey, is this a good project with great economics? Does this help you move the needle in your strategic directions? And there's nothing particularly right or wrong about type of real estate, as long as it meets your personal and your professional kind of vision where you want to go.
Right, for sure. So for those wondering, the book I was referencing is called Playing to Win: How Strategy Really Works by A.G. Lafley and Roger L. Martin. Great book. Highly recommend it. They talked about how Procter & Gamble have adjusted over these years, right? Like P&G is this ginormous company, but every brand that they have, they talked about how they've had to reinvent brands because they became, either out of style or, they're just kind of old school now and they want to get in with the new school. And so they have to reposition a brand or, they think, man, do we even want this brand playing in this category it's always played in? Do we need to create a new category for it? Do we need to acquire, a different company to merge? There's all these things they look at and I'm like, wow, I just really love the game of strategy. I get bored honestly, I get bored flipping houses because all of our flips look the exact same. There's really no creativity to it. It's just like, do we get a good deal? All right, great. You guys know what to do. Go throw the new kitchen in it. Go just get it done. Let's go. There's no critical thinking for me.
Well, the rule of thumb in business, if it's boring, it makes you money, it's good business.
Mm-hmm.
Now, you may have outgrown that business, but it doesn't mean it's bad business. I agree with you 100%. You want to find something that kind of catches your mind, catches your breath, and that you feel excited about doing the next project. But in general, having spent half of my sort of career in corporate world, I can tell you that I've seen companies that will evolve, like you said, Procter and Gamble, and redevelop, and the companies that go stale, like Eastman Kodak, that just doesn't go with the flow, and they lose market share, and then they barely stay in business.
Yep.
So you either adapt, evolve, and change. Every few years, you reinvent yourself, or you become the next dinosaur.
Yeah.
Unfortunately.
Well, and that's the point they were making is like, dude, even a company like P&G has to constantly reinvent itself because guess what? Everyone else is coming for their lunch, man. The competition is fierce, and if they ain't doing it, somebody else is going to do it, and they're going to lose market share even though they're the dominant player. And it just goes to show they use countless examples in that book, typically big corporations. But I've seen it just in a small level in my businesses, man. Like you look at say 10 years ago with house flipping, everybody was buying, well, maybe a little more than 10 years ago. Everyone was buying from the courthouse, right? Just
Right.
like so easy, just shooting fish in a barrel, just go bid, you win, you're getting these houses for nothing. And then all of a sudden the hedge funds go there and those people get weeded out. They got to adapt and start doing other methods to find deals. Then, people were buying deals off the MLS and all of a sudden, MLS gets competitive. People are buying from wholesalers and then all of a sudden wholesalers aren't getting as many deals or they're selling to the hedge funds directly. And so you can't pay what the hedge funds pay as a flipper. And so you start doing direct marketing, and direct marketing has all these nuances of what's working today may not work tomorrow. Cold calling and texting were great years ago. They still do well today, but not as good because there's all these regulations and there's things that are out of your control beyond competition that can change, the equation. And so, you look at just every business, and I've been flipping houses. This is my 7th year full time doing it, and I've just seen in the last 7 years like where our deal flow comes from and how we've had to adjust. And man, it's interesting. I don't even know how we're going to get deals next year because we're going to probably have to tweak some things.
That's right. And one comment, just saw a presentation of another CG guy. It was at the Freedom Founders Mastermind just a couple of days back. And this was a presentation I've seen before, and it was, again, fresh breath. Things have changed a lot and continue to change in the home buying industry. The iBuyers have come in brutally. You got the iBuyers and you got the Zillows who basically don't care about making a profit.
Nope.
For most small entrepreneurs, we do try to make a living.
We got to make some money. I'm not trying to gain market share across the world.
Exactly. They do two things. They gain market share at expense of a profit, and two, they test technology. They go lose $1 billion and the valuation increases from $10 to $15 billion.
Yeah.
Even though they lost $1 billion. So to them, it's not about the profits.
Nope.
It's unfortunately, I spend years in technology world. It's really about capturing the mind share, the market share, and sometimes it's dumb and dumber money, but it's very clever money. Their goals are very different.
They have a different game they're playing than you and I.
Right.
And
to us, it's dumb and dumber money. To them, it's a very prudent investor to get market share and to test their technology. They can go buy a house for $400,000, put it on the market tomorrow for $375, lose $25,000 plus transaction costs, and call it a success. How do you do that? Well, we tested technology and we got the market share. And we also sold a bunch of auxiliary services, the title insurance, the mortgage, the general contractors, subcontractors, this and that. They lost money, but they don't care.
No, not at all.
And it's very difficult to compete, by the way, with that because the agenda is very different. So you almost have to find better opportunities because investing, competing with 40,000 pound gorilla is pretty hard.
Yeah. Yeah. Trust me, I've been watching this for a while, and I was a naive investor back in the day. I'm still naive, but less naive. And I remember, everyone talking about the hedge funds buying up all these houses back in 2010, 2011. And they're like, oh, they're overpaying. They're paying 100% of market value. How are they going to make any money? It's like, well, their plan was to sit on these things for the next 10 years, and they killed it. And then I see the iBuyers, same deal. How are they overpaying for all these property? Well, their stock keeps going up. The way I see it, they're making a lot of money. Their value's going up significantly. And, that was why I started reading these big corporate books like the one I mentioned, learning about how Procter & Gamble thinks, learning about how technology companies think, and Uber and WeWork, and these guys who got multi-billion-dollar valuations, and they think differently because they're playing a different game. It's not about making money. And it's about increasing their valuation, increasing their market share. If they can create a networking effect that, everyone has to go through them in order to do something, they may not make money today, but I can tell you in the next 5 years, they are going to kill it. And Amazon is proof of that. Tesla's proof of that. Tesla stock, what are they, the first $1 trillion company now? And everybody hated on Tesla for all these years because they weren't making money. And look who's laughing.
That's right. So I remember the good old days of, again, it's I don't want to call myself an old, an old tech guy, but I was in that world, and I remember the 2000 bust and boom, or boom and bust. I think something else is coming like this. So there will be differentiation between the winners and the losers. There are a lot of money flowing into the sector, and there will be massive successes, but there will be plenty of failures. Just to be clear, this is not all everybody wins.
No.
This is not a kind of we might see another 2000 from the point of view that there will be some level of correction. At some point, investors will want to see some profitability, but who am I to know who's going to win? That's why, in everything else, those big investors who back kind of all the big the leaders, it's good business to understand what corporations used to do years ago. I don't know if you ever follow Jack Welch from GE.
Yep.
You got to be number one and number two. So whatever industry you're investing in, you can pick number one and number two, and the chances are when the dust settles, you'll probably do well.
Right. And one thing I want to make clear to everybody listening, because, a lot of people might be thinking, man, if I'm not number one or number two, I'm screwed. It's like, we're talking big business. Like, if you want to go flip houses, and you can go kill it being number 1,000
in your own area.
Yeah. You don't even need to be 1, 2, or even top 10 to make a great living flipping houses and wholesaling. Don't get it twisted there. Even for a guy like me, I feel like I'm one of the top, flippers in Vegas, and maybe for sure I'm the most known, but do I do the most volume? Probably not. Do I make the most money? Definitely not. But, there are advantages to being the most known. You get deals sent to you, you get people who want to invest with you, you get all these things because of being known. And so also figuring out, where do you want to be number one or number two at if you're striving for that? Is it to be number one or number two in actual profit? Is it to be the most known? Is it to be there's a lot of things you can compete in. And so that's where it goes back to picking where you want to play the game.
Agreed. I mean, we do a lot of commercial investing. And one quick comment is the world is so big.
Yeah.
I'm not striving to be number one or number two in anything at all.
Yeah.
But it's a little different game because we want to get strong returns. For us, it's not always about getting bigger.
Right.
It's maintaining and improving profitability. So it's almost counterintuitive versus some of those iBuyers and fintechs. They're trying to fight market share. I'm okay with that as long as we continue to strive for greater profits. And the opportunities are there.
Right.
The other really interesting problem, different problems. If you really big player, you're solving massive money deployment problem. You just raised $1 billion from Wall Street. If you don't put it to work, investors are not going to be happy, even though that $1 billion is not getting great returns per se.
Right.
For us, we are a lot more efficient because the capital we raise gets deployed with the precision of deal selection versus the other folks. They have a big money problem.
We have to put the money to work.
It's a huge problem. Money burns a hole in the pocket versus being very prudent. What we do when we raise capital through these closed-ended funds, investors pledge, but we don't take the money until we have the deal.
Right.
So it's just-in-time money on the best deals. It makes all the difference in the world. And as you journey through your first fund and second fund, this strategy works a whole lot better because you get to pick the best opportunities, and you don't need to worry about the 40,000 pound gorillas because you're not competing with them.
Right. And you don't have this big hurdle you've got to clear because you've been sitting on the money, not using it. And yeah, I mean, it just goes back down to these guys are all playing a different game. And so, you know, the smart thing is to not judge them because it doesn't fit our game. You know, we just don't, well, we understand what they're doing, but a lot of people just don't understand the game they're playing in. And so just understand your game. Whatever your game is, just don't worry about what other games everyone else is playing, right?
Back to baseball now. We are, we're recording this with the World Series. That's all I can tell you. And you're the professional there, and I'm the amateur. Our observation is you've got the home run hitters, and you got the guys who hit singles and just maintain high average, and they steal bases. And if you are one of these single hitters and just stealing bases, play your game. Don't try to compete.
Yeah.
With these home run hitters because it's a very different ball game.
Yeah, and you're not going to be successful trying to catch up with those guys because you don't have their strength, literal strength, or their talent, or that's their game. You don't need to play their game.
That's right.
So, well, cool, dude. It's been fun chatting about all this stuff. I'm looking forward to doing some deals together. I know that we'll be partnering up on some stuff. For anyone listening or watching on YouTube, where can they find you?
Yeah, appreciate Ryan having me. Easiest way to remember, right? I go as a Big Mike, as you know, in CG. So yeah. I run a fund. I do have a podcast.
Yeah.
Big Mike Fund podcast. So the website is bigmikefund.com.
Yeah.
If you forget a D at the end or you didn't hear the D,
yeah,
and you just go bigmikefund.com, I promise it's not a kinky site.
Big Mike has fun. Cool, man. All right, well, guys, I appreciate you for listening. Thanks for watching. If you get fulfillment or any kind of value out of this podcast, do me a big favor. Hit the subscribe button. Leave a 5-star review. Catch you on the next one. Peace. Thanks for watching The Ryan Pineda Show. If you want to work with me, head over to ryanpineda.com. You can find my courses, coaching programs, and upcoming events. We also have free resources you can download, so head over to ryanpineda.com.